I think that another thing which is quite useful is this probability matrix, because these are the runs of bad trades that I talked about. There's a 50-50 system. Now, if you're a pure trend follower with no fundamentals at all, just a pure trend follower, you're going to be right about 50% of the time. That's all. In fact, probably less. And there is the run of 4 bad trades in a row every 16. Now, by incorporating the fundamentals, folks, and pushing your hit rate up so that you're right 2 times out of 3, the cluster, you only have to handle 4 every 81 trades. And if you can get to a point where you're right 80% of the time, you've only got to handle a cluster of 4 every 625 trades. So, my advice to you is that when you're formulating your system, is that you do your best not to be trading all the time, but to be waiting to get 3 or 4 good trades in a month, so that you eliminate the clusters. And you can do that, as these gentlemen say, by putting together the fundamentals and the technicals. I think that trading technically alone is very difficult indeed, not because you can't make an awful lot of money, but because these clusters are really difficult to handle emotionally. Okay? After you've been wrong 5 times in a row, how good do you think you're going to be at putting your trading system into practice without fear or hesitation? It's going to be difficult. So, by adding the technicals and the fundamentals together, you can certainly push your hit rate up to this area where the clusters go away, and largely that's going to mean that you trade less. And for me, as I say, I want the share to be undervalued. I want the share to be growing earnings, and growing earnings strongly and safely. That's rising, and I don't like to buy into a share that's in fact under an 89-day moving average. Okay? And then I'm looking for a little pattern. Triangles are great, ascending triangles are great, falling wedges are great. To finesse a good entry. And I want to be buying in when the general market is positive. And that normally means that I like the general market to be above a 21-day moving average. Okay? That it's rising. And that's a very simple little edge that I've been using for a very, 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 very long time that gets my hit rate up to around this area. I think that there's a book out there that you could be interested in, those of you that are new. It's a book by an old friend of mine called William James O'Neill. It's called How to Make Money in Stocks. The book is 25 years old. William O'Neill has got a history very similar to Vussi's here, in that he started in the stock market as a junior in the New York stock market, and he then started his own brokerage company, and he's now got his own newspaper called Investors Business Daily. You can buy it at any newsstand in the US. So I think that you would find that book very useful for formulating your edge in markets. It's called How to Make Money in Stocks by William James O'Neill, Willie John O'Neill. Delightful old fellow. He's about 90 now. Okay. So don't complicate it. Really good fundamentals and a trend. Lots and lots of people, in my view, the Alan Gray methodology of deep value is wonderful if you're Alan Gray and you're buying a massive amount of shares. You've got no choice but to be buying in when there's a whole football stadium full of small people running away. That generates the liquidity for you to get in. But for most of us, we can get in just by pressing the button. Okay? So great fundamentals, but the share must be going our way. And then a simple one, technical pattern such as some of the ones that Barry presented in that slide to try and get you in at a good place. So the market's going to go your way fairly quickly. And I also want the general market to be positive indeed. Certainly for the last month, it's not a time to be buying stocks when the general market is falling, unless you want to short stocks. It's not a time to be buying stocks when the general market is falling. So try and get those good fundamentals, a trend, a little pattern to finesse your entry, and then you want the general market to be going our way. And the most important thing, folks, is don't lose any more than 2% of your kitty on any one trade. That will keep you alive long enough to get good at this. Focus on perfect execution of the system. If you focus on the process of trading, the cash will take care of itself. You know, and think, you know that rich dentist that lives at the corner of your suburb? He's got an S500 and the wife's got a Porsche Cayenne, right? He's successful because he focuses on perfect execution of each and every root canal, each procedure. If he focuses on perfect execution of each procedure, his waiting room will be full and the cash will take care of itself. And similarly, your job, folks, is to have a plan and focus on the process of executing that plan over and over and over again. And if you focus on the process, the loot will take care of itself. The biggest hurdle that you have is to get over the first 8 trades.